So we've been bullish, and I've taught this in the 2022 model last year on my YouTube channel. If we get a retracement or a reversal in the afternoon session, it's going to aim for the lows formed during the lunch hour. If you're trying to continue going long and we haven't reached an objective, which unfortunately we do here at 40.55 and a quarter, that level was the old rejection block from the daily chart. Again, what I mentioned in the beginning of the video. We'll cover this in a moment here, all that business, but the sell stops below this relative equal low. Once we went to that objective on the daily chart, in the retracement lower, it's going to attack, yes, the lunchtime lows, and the algorithm reprices down to it here, and all the way back down into a fair value gap there, and back into our 15-minute fair value gap that was given as the initial upside objective, range high of 40.17.5 to 40.12 and a quarter. That's that area here, and it does it perfectly. Stops dead in its tracks, right to the tick, closing in that fair value gap with a bullish order block. Nice little reaction here. That's 5 handles right there, offered beautifully. A little bit more than that, but you know, who's counting, right? So that lunch hour sell side liquidity pool was the draw after hitting the rejection block. And I took your attention into, if you're on Twitter, I took your attention to right in this area here. So the old daily rejection block is that 40.55 and a quarter level, and we have an old high. And I told you I would teach you a model tonight. If I'm bullish and I see an objective I'm looking for, in the case 40.55 and a quarter, which was the old closing price on the daily chart. Remember, I'm looking back 20 days. So these key levels, much like the 39.82 and a half level was key level last week, it was key level today. So if I'm bullish and I'm expecting price to reach to a specific level higher up on the higher time frame, and we've taken out a high like we do here, and we have yet to trade to the higher time frame objective, and we're past lunch hour, I will look for a fair value gap like this right at the old high, and we have it there. This rally up falls short of the rejection block, and it drops back down into consequent encroachment, which is the midpoint of this candle's high to that candle's low, that range right here. This fair value gap is categorized as a BISI, buy side imbalance, sell side inefficiency. What's it missing? It's inefficient in what? Sell side. So we're expecting it at a later time, which it does here, the market being offered in a down candle, and it stops dead in its tracks right in the midpoint. That's a long 5 handles from here to here beautifully. Once it does that and it hits the rejection block, or it could have been an old high, at that moment, then I'm going to be watching for a potential reversal. This swing low gets broken there. That's a potential reversal. Expect this to sell off aggressively and then go back through the gap that forms at the old high. If you get this breakthrough here, the very next selling opportunity, you want to use that, because this is going to be a very sudden breakdown of a market maker sell model. And it's going to aggressively reach for, in this case, the lunch hour lows here for sell stops. So we have the meltdown through that fair value gap. It does it here. And watch what happens. It goes right back up to it. There. That's your short. That short right there. You put your stop loss right above the high of the fair value gap that's formed here. This one, extended it in time. That right there is what the algorithm is going to refer to, that one. This fair value gap right there. And you want to see it leave some of that open like it does. And the next candle, look what it does. Boom! Undeniable. Now, some of you are going to think, there's no way. This is all hindsight. Go on my Twitter. Go on my Twitter. And I had it mapped out right before it reverses. And then I took you down into a 15-second chart. looking for 40.38 liquidity in here. And then boom, it hits it. And everybody else knew exactly what to expect next, which was the 40.35 quarter level to be traded back to. And then, because you're used to being with me, well, what's over here? Relative equal lows. But some of you forgot that that's the lunch hour sell side liquidity, which is exactly what I taught how to trade the PM session in the 2022 model on this YouTube channel, targeting those lunch hour lows when you're bearish. So here is that 1 minute chart. Fair value gap at the old high, breaks above, drops down, you go long right there. You can put a limit order rate at this candle's low. One tick below it will fill you. Rallies, down close candle, touches it here. You would expect, as you're watching price real time, it opens here, drops down till it hits it perfectly, that opening price, that's my order block. And then you watch and see, does it reach for the rejection block? It does. And through it, 5 handles. Look for a shift in market structure. There. If it gives you a selling opportunity and then takes out that fair value gap at the old high, once it does it here, as soon as it returns back to that fair value gap, that's the next sell. Elevator's going down. And it wilted from there. There are lots of these types of macros in my algorithm. They happen at specific times, certain times of the day. And this one here is the 2 o'clock macro. If you have a high that runs to a higher time frame, and you have an imbalance in here. The imbalance, once it's traded through, it becomes an inversion level. Just like the red fair value gap I gave you this morning on Twitter. It became an inversion level. This should have been what? Support. It does. Once it trades through it, it now becomes what? Resistance. Boom. It's not supply and demand. It's not classic support and resistance. Okay? It's completely algorithmic. And you cannot arm wrestle it. It is what it is.